What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, guys, I haven't made an AMC video in a couple of weeks, ever since we had the pop in price from the CPI to kind of just fading from that 414 level. AMC kind of pulled back with the entire market, and we really just been grinding, slowly to lower lows. Eventually, when I believe we're going to see sub 350 towards next year. But this morning, you're watching it, and all of a sudden, the price alerts, pre-market price alerts went off, and AMC took a massive dip to the downside, and knew there had to be news. So I want to talk about a couple of things on exactly what was said, what happens, and just really give you my perception on what Adam Aron is doing. Now, before I get into this, there is something that I want to state very clearly. It's something that I've said really over the past, pretty much his entire time Adam Aron has, really started tweeting, especially probably the past year and a half, is that what his goal is, what his incentive is, what his initiative is to help the company. Okay. So he believes if he helps the company, therefore it's going to provide value to shareholders. They're going to want to invest in his company, and it's a win-win situation. When in reality, everybody who's involved in this play is there for a significant short squeeze. And that isn't just to punish the shorts, it's for a tremendous squeeze. Okay, something greater from the $5 to $72, obviously. So you have to understand the perceptions are completely different. All right, and he's really made that clear, at least to me, in all of his tweets every time he spoke or anything. So today, there's some news that comes out that AMC Entertainment announces 110 million equity capital raise, $100 million debt for equity exchanged, and a proposed vote to convert AMC preferred equity. So just to digress a little bit, I think this was back in like June of last year. Adam Aron said, listen, we want to, be able to bring more shares to market to raise capital. Shareholders said no. He came out with the preferred equity. A lot of people thought that this could have been, partially like a dividend. It could help squeeze some of the shorts. You watch AMC price rise going into August, only to slowly fade. Inevitably, this is really just a, kind of a loophole into getting more shares in order to raise capital, and also which inevitably dilutes AMC. The reason why it dilutes AMC is because APE's valuation is backed off of AMC. That's why as soon as it began trading in August, by the time, the market or pre-market opened at 4 a.m. Eastern time, AMC, I think it was like $18 or something like that, and went right down to $10. Something around that time frame, the market automatically adjusted for this. And we've slowly seen APE just really go down to less than $1. The reason being for that is because APE is dilutable, okay? AMC directly is not. So investors are really not going to want to invest in a company that its, pure goal is to dilute and raise capital. Okay. That is, a short seller's paradise. When you hear, okay, that a company is looking to do this, shorts just pounced on this as quickly as they can. And I'm not only talking about, some of these big hedge funds, I'm talking about just normal short sellers. There are retail short sellers and so forth. They pounced on this, okay? And it's obviously worked. And you can clearly say APE's worked exactly as intended to let us raise the cash needed, okay? So that's why you've watched APE's price just get pummeled, okay, over the past, really ever since its inception. It really, maybe popped a little bit, never really stood a chance, and it slowly just grinded to the downside. Okay, so inevitably what Adam Aron is doing now is he is trying to convert APE over to AMC because he feels that the valuation of APE is just a little bit too low right here, but a huge discount in APE market price versus common stock must be addressed. So here's what he's doing. He's doing two different things. One, I don't think he's understanding that the fact that his main goal is to, dilute APE. Investors know that, and therefore they're just going to continue to beat down the price. Short sellers are, all right, and no one's going to want to invest to it because they're going to get dumped on, okay? That's the first thing. The second thing when it comes to this, okay, is he is kind of taking away his own ability to be able to continue to dilute, right? So when APE goes from where it is, let's say it's sitting at, I think it's sitting at about $1 as of right now. but it was sitting somewhere between 60 and 70 cents. It gets down to 20, 15, 10 cents. He's not going to be able to dilute it anymore. Okay. So inevitably, he's not only trying to, which is going to hurt AMC, the share price in the short term, but he's also trying to make sure he can continue to go and stick his hands back in the cookie jar because APE's price is too low. Okay. So that's, in my opinion, the biggest reason why he is looking to try to, get that conversion. Now, let's talk about the other part of this. And I'm sure more things are going to, come about. More questions are going to be answered, especially as we dive further into it. This is just a first initial overview. Okay, he wrote right here, also, a company as distinguished as AMC shouldn't let Wall Streeters wishing us harm drive us to being a penny stock. Now, on Wall Street, okay, a penny stock is not something that trades at, literal pennies. It's classified as any stock trading under $5. So in the shareholder vote, okay, which means we're going to have to approve this, you also can consider a 1-to-10 reverse stock split. Okay, so meaning if you have 1,000 shares of AMC at $5, you will now have 100 shares of AMC, at $50. So, the overall market cap of AMC stays constant, your value stays constant, and it just is a reverse split. We've watched splits, happen, obviously Google, Amazon, Tesla. They were regular stock splits. They do that to try to attract other investors when the stock price gets too high. And a reverse stock split is really the same kind of psychology. Our stock price is getting too low. We want to stay, complicit in order to be able to, still be on the New York Stock Exchange or the NASDAQ, or we also want to try to attract investors. And when they look at bigger funds do not invest in, penny stocks, anything under $5. It's just not good for their portfolio and so forth. Here is what it's doing. I'm going to give you both sides to this. Okay. I'm going to give you the positive side. All right. They're taking their float from, say, 560 million shares to 56 million shares. That is not including, okay, anything that would be, any APE that would be converted. That is just specifically talking about AMC as of right now. The positive side on that is the price can move a little bit easier. It's always, easier for a price to climb on a low float stock. We've seen it with biotechs. We've seen it with, some small, to medium-sized company. Obviously, most large caps, if not all large caps, have massive floats. But it's a little bit easier to see that price compound. We watched that with GameStop. GameStop would be able to move, at certain times, obviously, but be able to move, that 10, 15% so much easier than AMC. That is the positive side to it. However, the negative side to it is the term itself, reversed stock split. Now, reverse stock split, okay, from everything I've learned trading and inside the market, especially after getting burned years ago, trying to invest in a company called Dry Ship. Okay, this was quite a long time ago. Reverse stock split is really the death of a company. What it says is, listen, your stock price is getting low because your company is struggling. Okay. And therefore, what you're trying to do is artificially pump the stock price higher. And in one sense, you're almost just giving more ammunition to short sellers. Okay. Short sellers are able to take a stock from, let's say, $20 down to $2. Now you pump it back up to $20, and inevitably, if the fundamentals don't change, if the market outlook doesn't change, okay, if everything that's going on running your business doesn't change, the same thing is going to happen. And if you can go up and look, the history of reverse stock splits, and I'm sure you've been familiar with a few of them. They've been low float penny stocks that have been pumped by, people on Twitter. Okay. And they've done these reverse stock splits, and it really just, it kills, the stock. There are some, companies that have done reverse stock splits that it can be successful. Obviously, the fundamentals need to change. A lot of the underlying has to change. Just the fact that your stock price is higher isn't going to all of a sudden make things change. So I really do think that Adam Aron is kind of getting himself in a little bit of, a dicey situation here. Now, it is all pending, shareholder approval. If this does go through, okay, like I said, there is some positive side that it's a lower flow. We can continue to pump higher. Obviously, if they're able to raise some capital, I wish they would have been able to raise more capital, but obviously 8 just went down to nothing by the time they were able to sell it. That kind of changed some of the fundamentals on it. And long term, especially if, the economy continues to dive deeper into a recession that I think we're already in, he poses a bigger threat to the company in the longer term. Okay. So obviously anything around this, there's going to be attention to this, just like there was back in August, okay? Now, when other people might have had a completely different perception on what was going to happen with APE, all right, the whole preferred equity dividend, okay, and how, other, professionals and funds could see certain flow happening on this, it still attracted attention to AMC, and this might do the exact same. We could get a little bit of a pump coming out of it. So just keep that in mind for short term. And what I am talking about when I do say this with the reverse stock split, it is much, it is further down the road, especially if the economy continues to run into trouble. So guys, that's it for this video. I'll see you in the next one.